Ladies and gentlemen, good day and welcome to Jindal Steel&Power Limited Q4 FY24 earnings conference call hosted by JM Financial. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ashutosh Somani. Thank you, and over to you, sir.
Yeah, thanks, operator, and welcome everyone to the call. I will first thank JSPL for giving JM Financial Institutional Securities Limited the opportunity to host today's call. Without much ado, I'll hand over the call to Mr. Vishal Chandak, Head Investor Relations and Strategic Finance, to introduce the management. Over to you, sir.
Sorry to interrupt. One of the chair speakers' line has been dropped. I'll reconnect the management line back.
Sure.
Ladies and gentlemen, we have reconnected the management line back. Sir, please go ahead.
Yeah, thank you, operator. Good evening, ladies and gentlemen, and thank you very much, Ashutosh, for hosting the call on our behalf. We welcome you to Q4 FY24 earnings call for Jindal Steel&Power. So we have with us Executive Director Mr. Sabyasachi Bandyopadhyay and our CFO Mr. Sunil Agrawal with us. So without much ado, I'll hand over Sunil sir for his opening remarks and then we'll open up for the Q&A. Over to you, sir.
Yeah. Thanks, Vishal. Good evening to all. So let me first start with the overview of operational performance of the company for the fourth quarter of financial year 24. Our sales volume had gone up by 11% on quarter-on-quarter basis, which has grown to 2.01 million tons. The growth has come mainly from the higher export. Overall share of export in Q4 was 11% versus 3% in the previous quarter. Our steel realization was down by 5% quarter-on-quarter basis. The NSR was lower in both export and domestic markets. As we exist, we see slight uptick in realization by 1% in Q1 of 2025. Our SMS cost was almost flat on quarter-on-quarter basis. All the coking coal price was up by $21 for the quarter, which is offset by higher efficiency in our operation, which reduced our cost remain flat. Further, we are expecting lower price of coking coal in Q1 of 2025 by $30 to $40. Our adjusted EBITDA for the fourth quarter was rupees 2,512 crore, which is 10% lower on quarter-on-quarter basis, mainly on account of lower sales realization and which is offset by a higher volume. Our PAT for the quarter was rupees 933 crore, which is down by 52% on quarter-on-quarter basis due to lower EBITDA and some impairment provision that we have took in our Australian mine, which amount to 360 crore. Now I will update you on the financials for the complete year. Our production and sales volume remained flat, almost flat for the year. Average NSR was down by 7%. But SMS cost is again down by 9% for the year. Our adjusted EBITDA was up by 5% to rupees 10,231 crore for the year, mainly due to lower cost and higher product mix. PAT for the year was up by 86% to rupees 5,943 crore from the previous year. Now I will take you through the debt. Our consolidated net debt is 11,203 crore as against 9,150 in the last quarter, which is mainly due to support our capex expenditure. Now I will update you on the dividend side. The board has recommended a dividend of 2 rupees per share for the financial year. With this, I will conclude and hand over for questions and answers. Thanks.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, if you have any questions at this moment, please press star and one. The first question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, hi. Good evening, everyone, and thanks for the opportunity. Congratulations for a good set of numbers. I have two questions. The first one is on the inventory. If I see the inventory has gone up YOY, while we find that commodity prices in general have gone down. So is it finished product inventory or raw material inventory? How much would be the finished steel inventory at this stage?
I think details Vishal will provide you with details. I mean, inventory is up in finished goods as well as in raw material to support our production. So we have increased the inventory of our coking coal, which is in the raw material, and we have upped the finished goods inventory as well also. So detail will be provided by Vishal too.
Okay, sure. The second question is, if you can, in the absence of presentation at this stage, if you could just elaborate on the progress of various, packages with respect to the ongoing project.
So we are on track. Basically, whatever projection that we have given earlier, so we are on track on all the projects that I can.
Amit, the presentation has been uploaded, so I would request you to kindly refer to slide 30 of the presentation as well. As far as the projects are concerned, we are on track to deliver whatever we have guided so far.
Okay. What would be the CapEx guidance for FY25?
So, if you remember 2 quarters ago, we had published our capital allocation policy where we had mentioned that our capex would be in the range of 7,500 to 10,000 crore rupees, depending upon the kind of EBITDA that we earned through the year. Yes. So the philosophy is basically to spend whatever you have earned, keeping the debt in check. So, so far, the plan is to maintain the EBITDA, the capex spend in the range of 7,500 to 10,000 crores only. However, if the EBITDA generation through the year is higher, we would want to accelerate the cash flows as well on the capex front. But again, the whole thing would be subject to a disciplined balance sheet approach.
Okay, fair enough. I have other questions. I'll get back in the queue. Thank you.
Thank you. The next question is from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, good evening, sir. Thank you for the opportunity. My first question is on the volumes. Given we are seeing good progress on all the expansion projects and they remain largely on track, what sort of volume can we expect overall from FY24 for FY25?
So we are expecting good volume in the FY25. So exact numbers we will not be able to tell, but certainly we will do much better than the financial year 24 over the 25.
So Sumangal, as you all know, we do not give any forward-looking guidances, but as you have pointed out, with the capacities getting commissioned, backward integration progressing smoothly, we should be able to, clock a better volume run rate compared to what we have done in FY24.
Yeah.
Okay, got it. And from the blast furnace BF to BF2, do we expect commercial production to start from the third quarter onwards?
Yeah, we are expecting to start the.
So basically that would depend on the ramp up of the blast furnace when we declare a commercial production. Commercial production is subject to a lot of testing parameters being achieved. So I would request Sabi sir also to elaborate on that.
I think, thank you, Vishal. I think we are on track pretty much in terms of the project execution. And as Vishal said, there are commissioning parameters which need to be vetted out once we put it in place. But so far, we do not see any major hindrances in terms of our targets.
Understood. Just continuing on this, one is if you could just share what's the status of the two coal blocks which are yet to be, where mining lease is yet to be obtained. When do we expect that to kind of start? And secondly, slurry pipeline, we are still maintaining 1Q25. So if you could just update, given that it's maybe a month away from actually commissioning, what sort of savings do we expect from the slurry pipeline?
So as far as the two coal blocks are concerned, we are again pretty much on track, and as per the published document, we will hit those roads. Your second part was regarding the slurry pipeline. I think, again, there is a small patch that we are working on in terms of getting the permissions in place. That's what we are waiting on right now. Rest of the work is very much on track.
So, Manu, just to add on to what Savi sir mentioned, in terms of the two thermal coal mines, Utkal B1 and B2, we have not given any specific guideline as to which quarter or which month we hope to open these mines, but definitely within the year we would be opening it. Since these are matters which are not outside our control, so we'll not be able to give you any specific update on that. But yes, yeah, we are in a very advanced position to open these mines.
Got it. Thanks and all the best.
Thank you. The next question is from the line of Kirtan Mehta from BOB Capital Markets. Please go ahead. Mr. Mehta, your line is unmuted. Please proceed.
Are you able to hear me, sir?
Yes, we can hear you now.
Thank you, sir, for this opportunity. Just wanted to understand in terms of we have a capital allocation plan where we have specified the capex at 7.5 to 10,000 crore. What could be the impact on the project delivery, either if we are at the lower end or at the higher end? Would this target be achieved even we are at the lower end?
Savi sir, can you please take this? Savi sir?
Yeah. So first of all, the capital expenditure that is envisaged in this. So the lower end capex that is envisaged, that will certainly help us to hit the numbers that we are there. There are on the higher side capex expenditure that's slated for future growth plans. So I don't see any major obstacles in our way in terms of the capex. And as Vishal has very clearly stated earlier, our capex plan is based on our debt management. So overall, I think we are on track with our production plans and our investment plans.
So the way I understand this, even if we spend 7,500 crore for the next 2 years, our target, we will still be able to deliver on all the projects without any delay for the purpose of capital expenditure. And even if we do 10,000 crore, there will not be any acceleration in this project. Am I understanding you correctly?
No. Kirtan, just let me put it this way. What we have mentioned on our capital allocation policy is that our capex spend would be in the range of 7,500 crores to 10,000 crores per annum. Okay, depending upon the kind of EBITDA that we generate. For the projects of these size and magnitude, you cannot expect, that we will spend exactly 7,500 crores every year only. There could be a time when we spend a lot more than that, and there could be a time when we spend a little less than that. Okay, but overall, the ballpark range would be in this, so that, and it will be managed in a fashion that we don't spill over on the project timelines. So rest assured, neither there is a cost overrun nor there is a time overrun on these parameters.
But for the purpose of immediate 2 years, are you expecting anything above this range or to be spent below this range to deliver on your the timeline target?
As of now, there is nothing envisaged. If we have something on this, then we will definitely come back to you on this.
Sure. The second question was about our arrangement with RINL, where we were looking to sort of secure higher metallics, which could allow us to operate crude steel operation at a higher run rate. Is there any further progress on that you can share, and whether we will receive any benefit of higher metallics in FY25?
We are under discussions with RINL for potential of higher availability. So that discussion is going on. So far, we are continuing with the current process that we have already established. Vishal or Sunilji, you want to reflect on that? Any additional comments?
Yes, sir. So we are getting supply from RINL for the billet as per our MOU, which is continuing, and we are expecting that the required quantity will get from the RINL.
Just to follow up, what is the quantity that we are currently getting, and what is the quantity that we are envisaging for FY25?
Ketan, that is not in the public domain, so you might refer to any media reports that they are talking about, but we have not specified the agreement in the public domain.
From a perspective of the analyst, it would help us model the FY25 production levels. So if you can share from your side, we can work with a more informed way of estimating the FY25 productions.
Maybe we'll take it offline, and maybe I can help you a little bit on that later.
Sure. Just last question was on the write-off that we have taken in the Australia call block. Could you give us more color? What does it pertain to, and what is our plan for the Australian asset from here on?
Yeah, just I will update. So this is the annual exercise there. So as per local, they have to get the impairment testing every year. So this year also they have got the impairment done. This is for the intangible assets they are carrying in their books. So right now the Australian mines we have taken under care and maintenance. So due to certain issues there, so we are not operating that mines. So we have taken impairment of around 360 crore.
And is it likely to become operational again in FY25, or it could take longer?
No, we are planning to operate with single shaft basis sooner. We will get the permission and will start production with single shaft.
Thank you, sir. Thanks for this clarification.
Thank you. The next question is from the line of Ritesh Shah from Investec. Please go ahead.
Hi, sir. Thanks for the opportunity. The first question is on consumption basis. What was the cost for coking coal and iron ore for this quarter?
Sunil?
Yeah. So these numbers we don't share generally. So anything you require, you can contact our Vishal for the detail if you require them.
So, would it be possible just to add, Ritesh, we had mentioned that there is an uptick in our coal cost, which is in the range of $15 to $20, and that is what has played out through the quarter on a consumption basis.
And I have already indicated for the Q1 there will be reduction of around $30 to $40 that we have already mentioned in my previous statement.
Okay. Possible to give some details around iron ore sourcing strategy for the company right now and going forward?
We are sourcing our iron ore from NMDC, IMC. We have the MOU with all of them, and we are participating in the auctions as well. So we are sourcing from different all sources.
So basically, Ritesh, if you look at it, we operate two captive mines. One is Tensa and the other one is Kasia. The EC limit for Tensa is about 3.11 million tons, which we mine to the fullest. Kasia EC limit is about 7.5 million tons, which we typically do in the range of 6 to 7 million tons, depending upon the market conditions. Balance is sourced on a long-term agreement basis and on the spot market, depending upon the value in use. So it's a mix of both.
This is helpful. And can you please help me with the throughput for the two coal mines, which I believe have started, tonnage as well as potential cost savings?
So, Sunilji, do you want me to take this?
You can get answer.
Vishal, can I take this?
Yes, sir. Please go ahead, sir.
Go ahead, sir.
Yeah. So, again, we do not generally provide the forward-looking any guidance, but I can tell you that we have hit the carb for the capacity, and we are augmenting the capacity. So the EC capacity, we are in fact upgrading for both the Gare Palma 4x6 and Utkal C. And both will go up to 5 million tons per annum. And we are in the process of doing that application and get ourselves to that.
So would it be possible to quantify the throughput that we had in the quarter? Just trying to get a sense on the cost savings that we would have benefited during the quarter.
Sunilji?
Yeah. So basically, we have done from the Gare Palma around 1 million ton and around 0.9 million from the Utkal C for the Q4. That we can explain. Regarding the cost saving, we generally don't provide. Vishal, you can contact the Vishal for this.
Sure. Sir, how much did you say for Utkal C? I missed it.
Utkal C is 0.9.
0.9 million. That's okay. Sir, last question. I'll just squeeze in. Are we on schedule for HSM? Because I think BF, UF, HSM was all interlinked. That is what was explained in the last call. I do understand that you do not want to share details pertaining to RINL sourcing. But are we confident on rolling out stuff from HSM, say, by Q3? Is that something on track?
Yes, HSM is fully on track. We have already hit the run rate for 3 million tons, and we will end the year probably. Again, it's a forward-looking statement, not saying in particular, but this year 3 to 3.5 million tons, and next year 6 million tons. That's the target.
Sure. So this is very helpful. And last one, sir, pellet plant, if you could help on the utilization levels, and how should we look at the profitability, if at all, over here? Thank you so much.
So I can give you what we have been hitting, and in Q4 we clocked at around 4,500 ton plus a day, and in April we took that up to almost 8,300 plus tons per day. And in May, right now, we are clocking somewhere in between 9,000 to 10,000, depending on the days. And that's what we intend to continue and ramp up further.
Sure. This is helpful. Thank you so much. I'll join back with you. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your questions to 2 per participant. If you have a follow-up question, you may rejoin the queue. To join the question queue, you may press star and 1. Our next question is from the line of Pawas Pethia from Aditya Birla Mutual Funds. Please go ahead.
Hi, sir. Just in terms of overall capex, what is left to be spent in next few years for this 31,000 crores?
This is close to 15,000 crore. So we have spent around 50% we have already spent, and 50 we are targeting that next 2 years we will spend.
And maintenance capex will be over and above this?
Yes, that is over. Yeah, that is over and above.
What quantum annualized basis?
So basically we are expecting around 2,000 to 2,500 crores for the maintenance.
Okay. And just lastly, on this Australian mine operation, if the mine remains shut, what is the cost we incur annually if there is no operation?
Not much. We have already reduced a lot of manpower there, so our cost is minimum there. So we can just give you. I can explain that we have the minimum expenses there as of now.
So basically, the mine is now under maintenance and care. There is a very, very minimal sustenance cost over there, which is not a very big number over there. So basically, your overseas businesses earn and spend on their own, and there is no cash flow which moves out from the parent company into the overseas.
Yes.
So if that's the intent to understand whether are we funding the overseas projects, no, we are not. So basically, among the overseas, they are earning and investing on their own and sustaining their own expenditures.
Okay, but you said that 360 crores was a kind of a losses for last year for Australian mines.
This is not the losses.
Supported?
These are not the losses.
Impairment.
This is an impairment taken on the.
This is non-cash item.
Okay, so incrementally no cash flow from Indian entity to.
No. We have not sent any single pie from India for this during the last year.
I think we have mentioned in our previous calls also, Pavel, that the overseas operations have to earn their own EBITDA to meet their expenditure. We have long stopped funding from the India business.
Okay, but any corporate guarantees which are kind of supported from Indian balance sheet?
Not much. We have cleared all the corporate guarantee since we have only one 4.6 million corporate AUD bank guarantee is there. Corporate guarantee is there. Otherwise, there is no as such any corporate guarantee from India side.
Okay, thanks. That's all from my side.
Thank you. The next question is from the line of Indrajit Agarwal from CLSA. Please go ahead.
Hi, sir. Thank you for the opportunity. First, I want to understand about the NSR. So just to understand, you said NSR. How was the NSR this quarter versus last quarter?
So yeah, so we have just given you what the growth reduction in percentage basis. Exact number we don't provide in the call. So if you require anything specific, Vishal will provide you.
So percentage will also do. So quarter over quarter, how much was the move in NSR?
Basically, I have already explained that there was reduction in 5% on quarter basis in NSR for steel NSR.
Okay, and was there any pellet sales? How much, if any, in this quarter?
So no, breakup we don't provide. So yeah,
there is no pellet sale in this quarter.
Yeah.
So Indrajit, the pellet plant has not ramped up to its fullest capacity, and once the pellet plant also ramps up, the new blast furnace will come in. So we may not have any real surplus pellet to actually sell in the market.
Thanks for the explanation, Vishal. The reason I'm asking is our calculated realization is actually showing an uptick quarter over quarter. So I just want to understand where is the disconnect.
So that is mainly on account of our other like cement, power, everything. Others and sales that we have arrangement with the RNL. We are providing them the materials. So that includes. That's why our overall turnover is higher.
Sure. Thank you. Maybe I'll take it offline with Vishal. That's all from my side.
Thank you. The next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Yeah. Thanks for the opportunity. So similar question as the previous participant. Could you just help better understand this movement in revenue then? Because if NSR is down, what are the other factors which have offset that? And if you can give some color as to the number also.
So I think the details Vishal will provide you. Vishal.
Amit, pursuant to our MOU with RINL, we have provided a lot of material to them, and that is getting reflected as part of our sales in the accounting system. Okay. So the uptick that you see is basically the differential is on account of that particular material movement to RINL to support the restart of the blast furnace. Okay, but if you do your maths, you'll see if you're taking a 5% reduction on Q and Q, then the balance is largely, the payments or the material supplied to RINL.
Okay, got it. So that's the larger part of the explanation, is it?
Yeah. So you can take this as a one-off and then adjust it, because this is not going to be, incrementally recurring every year.
Sure. That's helpful. Thank you very much.
Thank you. The next question is from the line of Rajesh Majumdar from B&K Securities. Please go ahead.
Yeah, good evening, sir. Thanks for the opportunity. Am I audible?
Yes, please.
Yeah. So, sir, my first question was from April 1st till date, what is the quantum of price hikes we've seen in terms of an average price increase on a quarter-on-quarter basis, and how much of that will reflect in 1Q?
So, this is around 1,000 rupees on ballpark number I am saying. So, it is already up by 1,000 rupees per ton. And further, we are seeing the upside in the market in the month of May and June.
So, Rajesh, if you see, NMDC has raised iron ore prices about 300 rupees per ton, and that would be a similar range for other private miners. So you can quickly do the math. About 1,000 rupees increase in steel prices, roughly about 300 odd numbers increase in the iron ore prices, and there is what we have already mentioned, about $35 to $40 reduction in the coking coal on a consumption basis for the quarter.
Right. That's helpful. And my other question was on the tax rate. Obviously, we've seen the tax rate has gone up this quarter. So is that going to be from next year? Do we assume that the company will pay the 25% plus kind of tax rate from next year, or will it be slightly different from that?
Actually, there we have in JSP standalone, we will be having same tax rate of 25%, and for JSO, we will be having the lower tax that we have achieved in that particular company.
Okay. Thanks. And my last question, if I could sneak in one more, is that while ramping up the hot strip mill volumes, do you expect any kind of cost increases in terms of marketing because of the new products we are trying to sell in the market, which will actually have a kind of impact on the EBITDA per ton? Any kind of significant increase in marketing or other expenses which you envisage in this?
No, we don't see any increase in marketing expenses because we are doing marketing by itself. Our marketing team is doing the marketing of HSMI.
So Rajesh, on the contrary, the semis that we have will now be converted into HR coil and would be sold. So, converse to what you are assuming that there will increase in expenditure. Actually, we expect an increase in the EBITDA because of conversion of semis into flat steel.
Okay, that's fine. No, I know that. I was just wondering if there's going to be any kind of increase in the other expenses that we should kind of look at in this thing. That's not something I have.
On an overall scale basis, whenever you are increasing your volumes, you will experience some increase in the variable cost as well. But the point is, when it comes down to per ton basis, you would see economies of scale playing out.
Right. And that's helpful. Thank you so much. Thank you.
Thank you. A reminder to all the participants, if you have any questions, you may press star and 1 to join the question queue. The next question is from the line of Ashish Jain from Macquarie. Please go ahead.
Hi, sir. Good evening. Sir, my question, again goes back to realization. I know you partly explained it, but, I'm sure this will be a query with everybody. So is it possible to explain it on the call itself?
So, Ashish, let me put it this way. What you have seen is basically an increase on a Q-on-Q basis on the NSR, that the way we calculate it, right? But Sunil sir has mentioned that there's a 5% reduction in the steel realizations. So if you calculate the differential between these two, the large chunk of the differential basically goes on account of material supplied to RINL through sales. which is part of the MOU that we have done with them. Balance is a very, very small quantity of other operating income that we always have for any steel mill that you would see flowing through. So that's basic maths behind this.
Yeah. No, so just to clarify, so we should use the last quarter number 63,000. That's a clean number and take a 5% decline on that ballpark.
I think
you can some element of these supplies. That's the reason I'm asking.
No, that does not have any element. That is a normal number.
Okay. And then the similar amount we should take out from the cost also, because clearly your cost also per ton has gone up sequentially. I guess for the same reason, it's getting booked on the both sides.
Yes. Absolutely right.
So 12,500 the EBITDA per ton we are getting that's a clean number, right? There's no then it's all business related within that. Right?
It's all business. Yes. It's a normal operating income only.
Okay, got it. And secondly, my second question was on the coal mine ramp up. I know you kind of earlier indicated that it's difficult to put a timeline, but can you give some indication? Because this was the first year where we have seen the coal mine ramping up, and also can you give some indication of how the cost savings have come through? At least backward looking, you can give some clarity on that.
No, that we can't.
No, Ashish, we have time and again mentioned that we would want to refrain from giving any, color on the actual cost saving numbers, because that keeps on varying depending upon the e-auction prices and other things. So I would leave that for your calculation at this point.
Okay, fine. Thanks.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Kamlesh Jain from Lotus Asset Managers. Please go ahead.
Yeah, thanks for the opportunity. So I had one question on the part of your, the presentation, on the 24th slide number. There was a loss of roughly around 69 crore in the city in the EBITDA bridge, which was 91 crore in the previous quarter. So what that loss was in this particular quarter?
Can you please repeat the question?
So there was a loss quarter-on-quarter of 51 crore in the city, which you have shown on the slide number 24 of the presentation.
Okay.
That is mainly Australia operation. That other subsidy basically that is related to Australia operation.
But in last quarter it was 90 odd crore and it has 91 crore of profit, or I must say the contribution quarter in the previous quarter, and this quarter it is a 69 crore loss. So is it primarily on the operational side? Because as we have mentioned that in Australian operations we don't have much of fixed overheads and all those things, but despite that you have such a significant loss. And quarter if I see roughly around 170 crore of loss have come up in this particular quarter.
Basically you are that is swing from the previous quarter to this quarter.
Yeah.
It is not the exact numbers that you are looking at. This is swing from the previous Q2 to Q3 and Q3 to Q4.
Yeah, that's but if I see from Q2, then it is roughly around 170 crore.
So you can get the details from Vishal. Vishal will explain you separately from this.
Yeah. And lastly, on the project commissioning, I do believe they don't give the forward-looking statements or any guidance. But even if I see all the project metrics like on the electrification or civil work, there has not been significant movement quarter-over-quarter, and still we are so confident on our guidance part that all the projects are on schedule. But honestly, Q1 FY25 for slurry pipeline or Q2 FY24 for pipe for BOF looks very stressed. So how much incremental production or all that you are expecting? Because FY25, like we are going to see the growth and not much of capacity coming on in stream in India. So, like, even if we see last project, like 8 million ton, that particular guidance also which we have achieved after 3 years of the earlier guidance which we used to give around 5 years back. So what confidence do we have on these project timelines?
Sabi sir,
Sabi sir, would you like to take the projects part?
Vishal, somehow there was a disruption in my line, so I kind of lost the question midway. Can Kamlesh repeat the question, please, for me?
Yeah, sure, sir. So, if I go through your presentation, like say the presentation Q4 FY25, there has not been much of like say move ahead on the various stages of your project. So how confident are we on these projects, given the fact that we are so much near to the project deadlines or the timelines which we have guided, and and there has been no needle movement or a significant change in the project scope. So how confident are on these timelines of the project? Because Q1 FY25 for the slurry pipeline, and given the fact that the elections are there and this rainy period is going to start, and our ground work or the channel checks suggested that roughly around 40 to 45% of the work on the slurry pipeline is still pending. And even on the blast furnace side, there are also not much of significant changes there on the work process or the level of work which has happened over there.
So, Kamlesh, other than anything which is beyond our control, meaning with administration or authorities, anything that is pending, other than whatever is within our control, we are extremely confident of delivering it on time. In fact, the team has been, doing a fantastic job, and we are fairly confident about our deliverables. As far as projects are concerned, as far as the timeline that we have indicated, that indicative timeline we are extremely confident of. That's all I can say at this point of time. Vishal or Sunilji, if you want to add any color to it, please go ahead.
I think, Kamlesh, just one more thing, electrical is always the last which comes up. So you will always find electrical as the last thing that is part of the commissioning process. You cannot have electrical done before the civil. So that's how we have also arranged the entire presentation. So I think we are on track to deliver what we have guided so far. Slurry pipeline, we just mentioned at the beginning in the opening remarks also, as to a small patch where we are negotiating how we can get over things. But barring that, we are primarily on track.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Parthiv Jonsa from Anand Rathi. Please go ahead.
Hello, sir. Am I audible?
Yeah. Yeah, quite audible.
Yeah. Thank you for the opportunity. So just have a very basic question. Considering, recently all the steel prices, especially for the longs, have been going up, how do you perceive the next 2 quarters to pan out?
So next 2 quarters, nobody can explain as how the market will move, but we are just right now we are seeing the upward in the prices. So that's all we can say, that we are expecting good price jump from here.
Sir, is it possible to quantify any kind of a movement, what you are seeing currently?
So, Parthiv, we have mentioned that we have taken about 1,000 rupees price hike. Further price hikes would be subject to how the market behaves going forward. So, as you know, it's very, very difficult to take a call on the price hike selling over here at this point in time over the next 2 quarters. But yes, as we move in further, the most important point is that we are replacing a large part of our semis with HSM. So anyways, you will see that getting reflected in our improved NSR and EBITDA as well. So, and price hikes, yes, that would be guided by how the market behaves and how Chinese prices are moving up and down.
All right. Thank you, Vishal. Thank you so much.
Vishal, if I may just quickly add a point, is that Parthiv, one of the aspects that we are focusing on and need to be cognizant about is how we are moving with our product line, what we are doing with our value engineering and what segments we are moving into. So as Vishal rightly put it, that we are converting a lot of our semis into much more value-added finished goods, and so there will be an uptick in overall realization versus what we were getting. And hence that bottom line improvement will happen. It's not only through volume, but also through value engineering and value-added grade addition into our basket.
Thank you so much, sir. Thank you.
Thank you. The next follow-up question is from the line of Ritesh Shah from Investec. Please go ahead.
Hello. Hi, sir. Am I audible? Hello.
Yeah.
Hello. Yeah. Hi. Sir, my question is pertaining to power assets. I think we have 135 into 10 and another 250, 270 megawatts of total power capacity. Just trying to understand what was the utilization levels in Q4 and if at all there was any external power sales. And if you could also help on the state for Monnet facility.
So Vishal, yeah, go ahead, Sunilji.
We are selling, no doubt, we are selling merchant power from our DCPP, basically Tiger plant, and quantity we can't explain. So, but we are selling in the market.
So these are very, very small quantity of surplus power that we have, Ritesh. There is no big quantum of merchant power that we have sold. Like any other steel company, as you operate your SMS and glass furnace in tandem, occasionally you kind of have surplus power, and when you are drawing on the SMS, you have a deficit power. So between these two strings, you tend to have some surplus, as any steel plant would have, and that is what is being sold as a part of regular business. Okay, going forward, once we have our ACPP up and running, ACPP2, then we will see how do we deal with it, because at that point in time we might have some surplus. We will come to that point once the ACPP2 is operational.
What are the timelines we are looking at over here, and what are the variables that we will look at, whether to sell surplus or basically take down the older utilities?
No. The timelines we have already put in our presentation, and that's where we want to stick on to. So there is no change over there.
And what are the variables? Because earlier we had indicated from a ESG angle the station heat rate and lower fuel consumption. That was the reason why we were going ahead with ACPP2. Do we still stand by the same, or is there any change in thought process?
Well, Ritesh, the thought process remains the same. See, what is the whole idea of getting ACPP2? The whole idea is basically that this would be a lot more cost efficient for us. Okay. In the process, if we have surplus power in the intervening period, then we will look at how to address the situation. So in the past, if you go through it, we have explained various options. So we would want to evaluate as we go closer to the commissioning period of our ACPP2. Yes, ACPP2, the heat rate is significantly lower than the existing boilers, and being a pitted coal plant, it helps reduce our costs further.
Right. Sorry, just to continue. So what will be the extent of surplus that we are looking at? Is it like 3 units, 4 units of 135 megawatt? How should we understand that?
So basically that will depend when we will commission the first unit of this Monnet power. Thereafter we will strategize and update you on that.
Sir, but from a mass balance standpoint, there should be a broad indication, right? Once we go to 13-14 million tons, there would be some quantum of surplus power which would be there, and probably we might look to dismantle the plant, or we might look to sell out that particular asset. I'm trying to understand that as well.
No, we are not planning to dismantle the assets. So any capacity that we will have, depending on the market conditions, certainly we'll update you on that, and we'll sell the power or self-consume. That will update on that side. Right now, we don't have any plan to dismantle the units.
Okay. And just a continuation of my prior question, I think in one of the remarks, the management did indicate that they are looking at higher supplies from RINL. There was some emphasis on the word higher. I'm just trying to understand this, and specifically in the context that I think RINL is only running one of the furnaces right now, and that also it's in a bit of a problematic stage given some port-related strikes. How are we looking at approaching this particular scenario?
So this is a temporary phenomenon. So they have some strike and they are shut down. So that's why we are expecting to resolve that issue. And once they commission the plant, certainly they will supply to our commitment.
Right, sir. Can you possibly give some numbers?
Mr. Shah, may we request you return to the question queue for any...
Sure, sir. Sure, absolutely.
The next question is from the line of Ashish Jain from Macquarie. Please go ahead.
Yes, sir. I just had one bookkeeping question. What is the total volume of semis we have sold in 24?
Yes, sir.
Sunilji, you have the number handy?
Yeah, it is there. This is 1.4 million tons around. We have sold the semis.
Okay. So this will go to zero in 25, given we are hoping to operate HSM at 50%.
We will be converting to HSM. Yeah.
So Sunilji, so if rounds is not considered semis, then it's good. So we should clarify that portion, because rounds is a special product that we sell by design.
Actually, round is considered in semi, so certainly that will depend on the market conditions, whether we'll produce round or HSM. But round is a part of semis.
Yeah, so that's a part of this 1.4, right?
Yeah.
Yeah, got it.
We continue to sell rounds in the market because that fetches us a decent amount of...
That's a premium product. That's a premium product for it. That is a reference. Very niche product for us, and we selectively sell that based on the returns.
Got it. Thank you, sir.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments.
Hari sir, over to you for the closing remarks.
Good evening once again, ladies and gentlemen, and thanks to Vishal and Sunilji, and as well as the operators and the coordinators from JM Financial. It has been a pleasure and to have you on the call. I think we have, as an organization, have delivered our performance, and we will continue to be living up to the expectations of the market and our stakeholders. We are very focused, and the team is geared up to deliver the expansion plans as well as the production targets alongside. So once again, we look forward to having you very soon. And thank you very much. Have an excellent evening. Bye.
Thank you. On behalf of JM Financial, that concludes this conference. Thank you for joining us. You may now disconnect your lines.